and of itself. And the third thing is everybody asks, why is there no vertical parabola this cycle in crypto as a whole? It's because crypto moves in 100% in parallel with the rate of growth of money supply. And while the past two cycles, specifically 2017 and 2021, money supply has gone parabolic, or specifically the year over year percentage growth has gone parabolic. Over the past 2 years, money supply growth has been more like steady. And similarly, BTC has also been steady, right? If you overlay these two charts, they're almost identical charts. Yeah, because I mean, they're going to keep printing money. They have no choice. The governments have no choice but to keep printing money, which means that a cheeseburger is going to cost $50, which means that BTC is not going to be costing 10 million. It's going to be costing like 25 million, 30 million.
You had
Well, let me tell you something. There's even people that they are getting 4% interest per year, and they think they're getting passive income, but they don't understand that the money supply is growing at 8% per year, right? So you're just losing money either way.
So this
That's
is
why.
I
That's
never heard
exactly
this
why.
take.
Essentially, the system is printing money at somewhere between 7 to 9% per year, which means that if you do nothing, you're losing 9% per year. And so, even invest like the stock market is also growing at roughly the rate of the money supply growth. So you actually have to ask yourself, like, what percentage of the stock market is actual economic growth, as opposed to actually just running away
Ugh.
from the money printing, right? That's why that you need 100x to outrun all of this, to outrun the dilution. That's the only way.
Yeah, so I never
Yo, what's up, everybody? So I was on Twitter today scrolling, and I seen this graphic pop up right here, and a bunch of people were wondering or questioning. It had a lot of engagements asking how it's possible that the price can change so much while the market cap is remaining the same. And to some people, that may look impossible, right? But it's really not. It is all about supply and inflation. And let me break it down to you. So the first thing we need to do here is understand how the price of a coin and how the market cap is even calculated. The price of a coin is calculated by the market cap divided by the circulating supply, and the market cap is not how much cash has been invested into the coin. It is just price multiplied by the circulating supply. So if the numbers of token grows, price can even fall, even if the market cap stays consistent. So now if we go back to the November of 2021 and look at Solana's circulating supply, it was around 304 million tokens and the market cap was around 66 billion. So you take 66 billion divided by 304 and that'll give you the price of around $217 per Solana token. And by 2025, the circulating supply is now roughly 560 million tokens, which is almost double. So the same market cap divided by bigger supply equals a much smaller price per token, which is where we are at right now. And so that leads us to our next question. Why does supply even grow? And supply grows because many proof of stake networks like Solana, they mint new tokens to pay their validators and their stakers. There's literally a built-in inflation schedule that Solana originally came out with when they deployed, and it started near 8% and it was designed to decrease around 15% per year until it holds at a 1.5% inflation rate. And those new tokens, they enter circulation and they dilute per token value unless demand grows enough to absorb them. A lot of people, they don't really understand how staking works, and there's a big myth that staking gives you free money, but it's not really the case at all. If you stake a token and you earn 5 to 6% APY, you're really just keeping up with the pace of inflation and you maintain your share of the network. And the non-stakers, they get wrecked half the time, or really all the time. The real gains happen when price appreciates and the demand is increased. So now if we add USD into the equation and how inflation affects crypto, um, when the US dollar it loses its value, asset prices often rise in dollar terms, and that pushes crypto prices up as well. So you've got a little tug of war going on. When the US dollar is inflating, the crypto prices will rise, and when tokens inflate, the prices will go down. The net result depends on how fast demand and adoption grows versus how fast token supply grows. So when we zoom all the way out and we look at how USD inflation and token inflation are happening at the same time, one pushing prices up, the other quietly pulling them back down. And somewhere in the middle of that tug of war is us, the trader, where the everyday crypto investor lives. That's why price alone never tells the full story. Real understanding comes from watching supply, watching demand, and paying attention to how fast the system is expanding underneath the chart. Once you see that, you will not look at crypto the same. And if this helped you at all, maybe look at the market a little bit clearer, please go ahead and tap that like button. Go ahead and subscribe for me, and I'll catch you on the next video. Peace.